Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. So today's video, it's going to be about the Dix trade. Uh, it's been kind of a wild few days. Uh, a name we've been focused on, we've written about, we've talked about before. Today's video is going to focus on the kind of like the aftermath of earnings and really why unusual options activity can be a pretty lousy predictor when it comes to catalysts. So like earnings, all sorts of different events, but why in the aftermath of those earnings or events it can actually be super helpful. So I'm sure most of you that are subscribers or have watched our videos or listened to us on the VTF, you know that we aren't like most of the option guys that focus just solely on unusual option activity or big call buying, big put buying. There's a lot of option traders that live and die by that stuff, and we really aren't like that. We like to find interesting setups and basically design our trades, how we feel risk reward is appropriate, or how like the option pricing is appropriate, or basically like we take the setup and we design the trade, right? And if the option activity confirms our bias, that's it's awesome. That's great. Like it's a vote of confidence. But if it doesn't, it still won't typically change our thesis for the trade. I mean, there's a reason that we like it in the first place, and if the risk reward is attractive, then not having all of the big call buying or big put buying, I mean that's really not going to change our mind much when it comes to the trade. And really, like part of the reason why we don't focus on that unusual option activity as much is because the track record for all of that, like big action around earnings and events can be kind of a bad predictor, or it's not as high as maybe other different types of setups when all of that like really crazy like unusual call buying, like the Nigerians are always like pointing out. There's probably setups where there's a higher percentage that works, but when it comes to like earnings or drug news or all sorts of things, like it's not as great of a predictor. So that's why we like to focus on the setups, and then like the option activity is secondary, almost like a confirmation of what we're thinking. And Dix, so the recent Dix trade is a pretty good example of this, right? So we wanted to get involved. Let's go in a little bit further here. So we wanted to get involved on Dix when it broke through the 50-day. So you can see it had rolled over and was like stuck underneath the 50-day, kind of in a congestion area. But as we got into the retail earnings, it started to wake up, and basically when it broke through the 50-day, we wanted to get involved. Just because retail was so strong, the numbers were coming in great, things were starting to take off. But also B, because Dick's last quarter we were in this one, and it had such like a strong quarter, and it was well off that late May high. So it was coming off a good quarter. Retail was strong, got through some moving average resistance. So we thought there was a good chance that you could see a move higher into earnings, which were at the end of August. And as it stands, it did start to move higher, and then it really started to work well. And during this move, this is really when like the option activity started to pick up. Was during this move. There was the September 21st expiration 40 calls. A couple of big blocks of those went off. The 41 calls, and there was like weekly option activity. So really like short term, huge option activity going off, and basically, you can see here there was like a gap down, and like that was the Hibbett report. So Hibbett missed, dragged down Dix with it. But even after that, so even after it got knocked lower, going into earnings, there was even more bullish option activity. So you had like really short term bullish risk reversals that were going off right into the print, and I mean, you can see. I mean, like the number was mixed, and the stock got hit pretty hard. Bounced sharply off the 200-day like day of its print. But you can see. I mean, like all that bullish option activity, it was pretty lousy indicator of the actual catalyst, right? So you can see. I mean, it didn't work out how they were anticipating. But when it becomes interesting to us is the aftermath. So when the stock gapped down to the 200-day and then like the day of earnings it rebounded, then we want to see what all that option activity, what how traders are handling that, right? So you want to see what they're doing. I mean, if they're all just dumping their bets, selling for pennies on the dollar and just moving on, then you're like, okay, there's probably no chance of a rebound. People are kind of like writing this one off. But in this case, what was interesting to us and why we like to we like to make note of the option activity is because we can like circle back and use it for reference. So after the report and the stock bounced just on this first day, most of that size, so the September 40 calls, September 41 calls, they weren't touched. Like they didn't close them out. So instead of like closing and taking the money and moving on, I mean they stuck with it, and that gave us confidence that there could potentially still be a bounce in this name. And I mean, you can see it. I mean, it really has put together a pretty impressive rally since then. And actually now it's threatening to break out through the past couple of months resistance. And, scrolling back a little ways, you can see how much room there could potentially be if this starts to go. And now, like those bets have come back from the dead, and, the September options still have a few weeks left. So it's even more interesting to see what they do now because they could get most of their money out, or if this thing starts to go, I mean like those 40 calls, the 41 calls could really could really take off, and that's why like we're gonna be focused on the option activity now. We weren't focused on it into like the report, but like in the aftermath, it's interesting to see how the big money manages the trade. And for right now, they're sticking with their bet, so we want to stick with it. But because there's only about 2 weeks left until expiration, we're obviously going to be keeping a really close eye on it. Because if they start to take money off or roll, then that probably means that the short-term momentum is nearing an end. So we're probably going to be in like the same boat. But yeah, so we just wanted to we want to talk about this because this was just a good example. I'm sure if you guys trade options, you've seen it, all over the place that people are always like reporting big blocks here, big block there. But for us, we like it as reference, not necessarily as a determining factor for why we get into the trade. And this DIX trade is a pretty good example of why. So as always, we love to hear from you guys. So if you have any questions, comments, again, if there's anything you want to hear about in these Facebook Live videos, please reach out. We'd be happy to go over pretty much any topic, trade wise or just basic option wise. So please reach out. Have a fantastic night, and I'll talk to you soon.